4 days left. So we are live, it looks like right now. Let me just give it a minute here.
Broadcast is live. I got it.
Yeah, looks like we're good. All right. So I don't know. I got to share my screen here, I think. Share screen. Hopefully this works. Share. Let me see. So we got a blank screen right now on. Oh, there we go. We look like we're good now. All right. So done. Okay, I think we're good to go here. All right, man. So Blue Lion Finance is on with Financially Fit today, and we're gonna do a market close. And we were actually talking for about, I don't know, man. We were talking about 2 hours probably.
A good chat to get going already.
Yeah, man, it was good. Definitely nice to kind of hear another value investor talking about opportunities in the market and talking about what's going on in the world. So kind of tell me a little bit about your channel and we'll kind of get into how we met.
Yeah, absolutely. Well, first of all, thank you for having me, and I want to welcome anyone who's about to come in, join us on the chat. But Blue Lion Finance, it's all about dividend investing, value investing. I am the type of investor who I want to play it, very prudently as I invest. Like to sleep at night, and I started my channel, Blue Lion Finance, actually with just one goal in mind, and that was to help one investor per day. So in terms of where I sit, for how I see it, I'm not so concerned about even monetizing my channel. When I get that like, or when I get that comment that says, X, Y, and Z, recommendation helps me, that's the biggest reward, and that's what I still run with today on the Blue Lion Finance channel, just to help investors. I hate to see, newer investors throwing their money in the market and losing and then backing away from even investing. So that's how Blue Lion Finance started. But let's get financially fit as well here. I'd love to know, how you started and why.
Yeah, so was in financial services for a little while and just realized that I didn't feel like I was doing what was best for kind of the clients that I was in front of. It felt more like a sales job. It wasn't really about financial literacy and just kind of wasn't what I signed up for. So I decided to just start the channel and just talk about basic finances. We talked earlier about kind of, we both got on the bad side of things where, certain stocks that blew up our channel was probably, the worst thing that could happen, So, that happened. And so basically just wanted to teach people about, kind of how to approach investing, about, really digging into the stocks, numbers, and figuring out if the economic backdrop aligns with that. And what we're starting to see, and I think, we were talking about it earlier, was there's a lot of YouTubers out there pumping stocks that, are very popular within the community, but unfortunately they don't have good fundamentals behind them. And whether that's, they're not going to be cash flowing for 5 or 6 years. And now we're talking about an interest rate environment that's going up. So, there's a liquidity crunch there that they can't get capital. And so I wanted to kind of be a voice of reason within all of that and say, hey, this is me just being unbiased and looking at companies, and this is what I think that they're worth, just looking at the fundamentals and taking my emotions and the story out of the equation. So that's kind of how I started this channel. But I'm super glad we met, because I watched your channel and I just felt like you come across extremely genuine. And I think that you do a great job of kind of giving the backstory, a lot of these companies and where they come from. And so do you mainly invest in dividend aristocrats? Is that kind of like the criteria?
So it's a part of the criteria, at least for me. Definitely my channel is dividend investing, focused. That's not to say I don't have any growth stocks. I do hold some growth stocks, but predominantly it is dividend investments. And, the reason being, I've been saying this a whole lot lately. Number one, it pays to be patient. And number two, I'm not looking to kind of throw those stocks out there that you actually mentioned a lot of YouTubers are throwing out. And I like to call them the get rich quick stocks, where, you're throwing the stocks out and perhaps they're not even good investments. The fundamentals are off. So then you get those beginner investors who are jumping in on them, wondering why their accounts aren't growing, the money's not going anywhere, and they end up losing. So for me as a dividend investor, I want to throw money in. I usually start off by looking at, dividend aristocrats, dividend kings even,
Yep.
and sifting through those lists.
Hmm.
Of course, I have like my core investments, whether it's the Apples, the Johnson and Johnsons, the Realty Incomes, but I'm constantly sifting through dividend investment lists and taking a look at what's undervalued, and if I can get in right now and just hold, collect on the dividends, and watch the share price rise over time. I mean, that's my goal.
Yeah. Yeah. And guys, if you're coming in here, appreciate a thumbs up. And we were talking earlier about the opportunity that we see at hand, and we both were kind of on the same page that looking at, kind of the financial industry as possibly the bigger banks that are well capitalized here. And, just to give you guys kind of a run back here, the big banks actually had their stress test. JP Morgan, Bank of America, and Citigroup may need to cut buybacks, but overall, stress tests came out really strong for the banks. So we're seeing finances lead the way today, which, to me is no surprise as there's so much uncertainty. And this is like, this is a time when you think there's so much unknown. You want to invest in companies that are well capitalized, that are cash flowing. And now that we have interest rates actually getting some separation here, gives a great opportunity for idled money in banks to do extremely well. Obviously you want to watch kind of the credit cards and things of that nature as consumer credit is going up and consumer savings is coming down. But when we look at the grand scheme of things, the banks should be set up, if we get another leg down here, the banks should be set up to do extremely well and have plenty of liquidity to get through any sort of crisis here.
Just to double back on that, look, banks have been hit pretty hard throughout the past couple of years. I've been enjoying the valuations I've been looking at, but now, right now, looking at their valuations and realizing that yes, interest rates are on the rise. And this is what we already mentioned, a little bit earlier, was the fact that those rates going up ultimately mean banks are going to capitalize on net income. And
Yeah.
from there, what does that mean? Better margins. Better margins means that stock share price is going up. So I am absolutely in love with banks right now. J.P. Morgan.
Yep.
It's not in my portfolio, to be honest with you, but Bank of America is.
Yep.
And I think I shared this with you earlier that Bank of America was projected 15 to 20% in terms of the increase this year,
Yep.
contingent upon those rates. So I'm in love with banks.
Yeah, I would say that you don't even need to get cute with picking one individual bank. Just buying an index of the banks and maybe layering it on with a JP Morgan or a bank that you want some extra exposure to could be the way to go, because I think they're all going to do fairly well. And when we talk about the drawdown that we've had in this market, you don't have to pick the winners and losers. You could really start looking at the indexes as the indexes are down 25, 30, 40% depending. Pick up a basket of stocks and don't try to pick the winners and losers in uncertain times. You're already buying them at a massive discount here. We got my buddy Tom who's on here. He loves dividend. He's a big time dividend investor. He actually, you were telling me about the pandemic when you bought Bank of America.
Sure.
And he went big on Ford at like $4 and $5 and wrote it up to 20 and did very, very well with that. So big time
Beautiful,
dividend
beautiful
investor.
job, Tom.
Yeah. So that was a great investment. And then how often do you have to go out and adjust your dividend account? Once a day, a week, or a month? So how often are you adjusting your dividend account? So I guess when your dividends are, supplied to you, do you just drip them, or are you adjusting your positions? Like, how do you handle the actual payments of your dividends?
It's a great question. I do use drip, of course.
Yeah.
And actually, right now is an ideal time to use drip because of where the market is. However, if the market is going to go back up, I actually take drip off, and I make sure that I am putting all that money into my settlement fund so I can reallocate as I see where it's needed. And I think that's important. Drip is very easy, of course, but I want to make sure that I'm always buying more dividend stocks on the discounts, or at least the valuations that I like. I
Yep.
think it's important for an investor to know that if the market's really rallying, be a little careful using drip.
Yep.
But as a dividend investor, I mean, predominantly, I'm not looking at my portfolio all that much, and that's
Yep.
actually what I enjoy the most.
Yeah, I would say that's the biggest problem that I have, and I think most people probably have, is that we're looking at our portfolio way too much. We're worried with, like we were saying earlier, you're looking at the ticker, you're not looking at the actual company. So it's like, we were talking about Citigroup, Citigroup sitting at, I'm thinking I'm getting it at a great buy at $47 and it goes down to 45. And I'm like, oh my God, I'm down 5%. And I just bought the damn thing. But I'm looking when you have that behavior, you're looking at the ticker. You're not actually looking at the fundamental business saying, I did my valuations. I think, it's a $55, $60 stock and I'm getting it at a pretty good discount, factor in dividends reinvested, not a bad return, probably going to outperform the market over the next 18 months. So, that's like definitely, that's the mentality you need to have is more of that longer term mindset. And, as long as you're doing your valuations and it makes sense, dollar cost average down. If the price gets that much cheaper, go back, make sure that everything's still in line with what you're trying to accomplish and the company's, achieving what they want to accomplish as well.
All right, I want to touch upon that too. Dollar cost averaging. I mean, an ideal strategy. However, if the market continues to plummet, right, you can always throw more into the market. You can dollar cost averaging when you see that ideal price. Go ahead, dump some more money, into that stock that you're already dollar cost averaging into. And, talk about emotional investing.
Yeah.
It's one of the scariest things I think an investor can do. And again, that's why I started my channel, and perhaps why you also started yours, is just understanding that if we're going to be jumping on to YouTube and listening to a lot of these YouTubers talk about, the latest, the hottest, maybe the sexiest stock that's out there, perhaps not the best fundamentals, but it's really exciting to get in right
Yeah.
now.
Mm-hmm.
I caution every investor out there, because you got to be looking at the fundamentals. You got to be looking at the balance sheets, understanding what you're getting invested in. Let's be honest. I mean, it's really fun to be invested in, cryptos. It's really fun to be invested in Tesla.
Yeah.
However, oftentimes there's very lucrative plays: Johnson and Johnson, Coca-Cola, Procter and Gamble, Apple, Microsoft. So I caution, investors in that regard.
Yeah. Yeah, it's the beta, right? The beta is extremely high. So you have these wild swings where in one day you can be up or down 15, 20%, but what's the true trajectory of the company? What are you really buying? Are you buying something that moves, the ticker's moving, or are you buying where the actual company is moving in the right direction? And those are two different questions, right? Like the ticker's one thing and the company is a whole nother. And for me personally, I tend to think that everything comes down to valuation. Like, everybody says, oh, are you a growth investor? Or are you a value investor? The bottom line is you need to be buying stocks at a certain price to where you're getting a capital appreciation. So we all are somewhat a value investor at the end of the day. And unfortunately, Wall Street knew that there was a lot of liquidity out there and started these SPAC deals and IPOs over the last 2 years of amounts unprecedented that we've never seen. And now you're starting to see these bubbles pop, and all these YouTubers are starting to get a lot of hate now because they never ran valuations on these companies. They were just, like you said, they were just the absolute popular name. We jumped on the ticker because what was happening, the stock IPO'd at $10 and went up to 50 or 60, or you look at a case like Robinhood, where it was like IPO'd at 11 and went up to $85 and it's at $7-8 now. Well, maybe today it's up like
Look, anytime we're going parabolic on a stock, I am very, very cautious, and you often see that happen, right? Robinhood is a perfect example. They IPO, their stock soars, and the next thing you know, you have a lot of investors that are actually losing money.
Yep.
And I even hate to call, those jumping in a case like that investors, because for me, that's gambling.
Yeah.
I'm a big Warren Buffett guy. And to your point regarding, even emotional investing here, is something I always reflect back to that Buffett shares quite often, is that investing is like buying a farm, right? You're not going to buy a farm to buy it and sell it next Tuesday. You're going to buy a farm and hold on to it perhaps a decade to maybe even a generational purchase to hand down to, your kids. And I think that's important. That's actually how I look at my investments. I go in with the mentality that I'm not going to sell. Never sell stocks, I like to call them. But that's the mentality that if you really are looking to make the money to hold on to these investments, then go in with the mentality that once you're in, you're in.
Yeah. Yeah, I think that's great. And as Susan pointed out, it was fun while it lasted, but the party is over. And I think we're seeing that right now. The party's definitely coming to an end. Once you start talking about money's no longer free and you actually need some sort of business model. And, one of the areas that I look at when I'm looking at, reports is how you can tell a company has a competitive advantage is when the cost of goods are coming down or sales general administration is coming down, but yet their top line's still growing. That's how you know a company has a competitive advantage. when they don't have to spend as much to outgrow other companies, they have an advantage. And unfortunately, with a lot of these SPACs, it's the complete opposite. They're spending more than they're actually making when you really look at the fundamentals. And you're right, Susan, the party is definitely coming to an end for a lot of these companies. But with that being said, I do think there's possibly some opportunities within a lot of these companies that are, beaten up. But you have to do a lot of, due diligence on them. You have to really trust management to deliver on some of these promises in an uncertain economy. And that's why your approach is something that is a little bit more simplistic, but it's also, these companies are not going anywhere. You don't have to, like you said, you can sleep at night. You don't have to worry, that it's your company's going bankrupt tomorrow. They can self-fund. They have cash flow. They have tons of cash on their balance sheet. They have multiple ways to tap into credit, where a lot of these other companies, the only way they're going to raise funds is through dilution, and that's going to only hurt the shareholders.
This first of all, I love that, Susan. It was fun while it lasted, and the party's over. I got it. This brings me right back to if you're one of those investors who's the last man standing at a party, you never want to be that guy. That's honestly what I'm seeing across the board on YouTube when I go video to video to video, and I'm seeing what commenters are saying about some of these hot stocks, if you will, on YouTube. They're oftentimes caught in the firing lines. They oftentimes are that last man standing at the party. That's an ugly scene.
Yeah.
But this also begs the question, Colin, what is your biggest position right now?
So for me, it is healthcare. I'm big
Okay.
into. I'm overweight healthcare right now, and I do have some REITs. I think REITs are a good hedge to inflation,
For
and I'm
sure.
starting to build into the banks now. So I think the opportunity right now is with the banks. I think REITs are good hedge to inflation. I think healthcare is fairly cheap, and my largest position is obviously cash. As I was telling you earlier, I completely sold out of the market and started dollar cost averaging once I felt like the S&P got to a certain point that I thought was more fair market value. So
Sure.
just to give you kind of like, like I told you, I'm a little bit more active of an investor than most, but I would say I'm active, to the fact that I look at the S&P and I think, over the next 4 quarters, it's projected to do about $233 of, earnings per share. So if we put a 15 multiple on that, the S&P should probably be trading between 34, 35, 3,600, right in that range there. So I felt like anything over that price to me it was a little risky in this market when we consider a tightening process taking place. And then if we factor in possible recession, then I think you need to be looking closer to the low 32, 31, 3,000 level, as crazy as that sounds, depending on how deep of a recession we go. So for me, I look at the indexes first and then look at what can outperform. I know that sounds a little kind of crazy, but it's my active approach to doing it. So within those sectors, I think is opportunity. So as I stated before, I think finances are going to present a heck of an opportunity here. And that's a sector to me that is very undervalued when I compare it to consumer discretion. I think consumer discretion is very overvalued. I think energy is getting overextended to where if I did own those companies, I would be leveraging out of those right now, just because I think they've had a heck of a run. Energy is up 60% over the last 7 months. That's a
You
big
shared
move.
you shared it maybe a little bit crazy, right? But you know what? Your strategy is your strategy, and it's been working.
Yeah.
So I wouldn't even dare say that it's crazy. I think everybody, especially during these unprecedented, volatile times, has to have a strategy. I'm also cash heavy right now, with my largest position being Apple. A huge fan of Apple. And
Well,
it is
they're not going
growing.
anywhere. They're not going
They're
anywhere.
not going anywhere.
Yeah. I
I've
mean,
actually been buying Apple dollar
yeah.
cost. It's one of the dollar cost averaging companies I've been investing into over the last few weeks. And, hopefully the market dips again so I can go ahead and buy more. But, to your point with the recession, from your opinion, what happened this week? I mean, from where I was taking a look at, the macro, market this past week, I saw on Monday investors who were ready to go, ready to fly out of the chute on Tuesday morning. The markets were closed on Monday. I think, Jerome Powell spoke the previous week, and then we had the testimony again this week. But on Tuesday, we already started to rally. I
Mhm.
was under the impression that we would get a very volatile week, and it's been quite the opposite actually. So I'd love to get your take. I know we were talking about it a little bit earlier, but let's dive back into it.
Yeah, so I think what you're seeing is you're seeing repositioning taking place with a lot of people's portfolios, especially the hedge funds. I watched put and call ratios over the last few weeks, and it was heavy put volume coming in here. So those the put volume, obviously the expirations, people took profits. So you're starting to see put call volumes get a little bit more equalized, which is going to cause a natural rally as we're down pretty drastically overall. So you're going to get a natural bounce within the market. So I wouldn't say that today, especially when you look at a rally like today where everything was up across the board. I always question those days, right? Nothing fundamentally changed when we think about, we know that the Feds are going to come back out and raise rates again, right? We already know that. We still know that they have to let $95 billion worth of assets expire off their balance sheet. We don't know how the financial markets are actually going to respond to that, even to this point, right? So to have a rally today, to me, is a lot of repositioning. We're extended to the downside, so you get a technical bounce. You get a lot of buy the dip type of buyers coming in. As you stated earlier, we had a long weekend. Maybe there was some optimism. Fuel prices came down, so I can see retail investors getting excited that inflation might have peaked. Fuel prices are coming down, and you're starting to see a lot of this optimism within the market. But it's short, in my opinion, it's short-lived optimism, and it's a technical bounce when we think about just buying the dip and people repositioning. So I think you saw that this week. It'll be interesting to see. I think we'll get some follow through next week. I think we're going to tap out right around 4,000 if I were to guess on the S&P 500. I think that's a key level for a lot of people. Both the shorts and the longs are looking at 4,000. So that's just my opinion.
We're rolling into to next week. We will have more inflationary data coming out next week. And, in terms of this week, we actually had a lot come out this week in terms of data.
Yeah.
Jobless claims came out. We had initial, existing home sales also came out. We had consumer sentiment come out on Friday. And, I'm very curious now after this week to see what's on the agenda for next week and how we're going to be reacting.
Yeah.
And,
Yeah. It's been a weird reaction. It's like, like we were talking earlier, the Feds came out, right? And we already know we've had negative 1.5% GDP last quarter. And what happened in their last meeting is they said that GDP is going from 0.9 to 0. So we're going to have zero growth this quarter, which means that if we go negative, we're technically in a definition of a recession. We could be in a recession right now, and they would just backdate it. And I tend to believe that we are in a mild recession already. We won't get the true definition of recession until it passes. That's unfortunate, but that's just how it works, right? Because what'll happen is we're going to get negative GDP. All of a sudden, we're going to have layoffs, and they're going to be like, "Oh, the recession started in June." No kidding, it started in June. We had negative GDP in June. So it's like you got to take it for face value. Could we squeak out a small gain and then have negative GDP going toward the end of the year? I think so, but it still equates to the same outcome, which is mild recession. And I'm not trying to be pessimistic. I'm just trying to give my 2 cents on.
This is what we spoke about before. There's nothing wrong, with being more pessimistic right now, because that's the reality. And right now, I read a article that came out. 10 Americans, 6 of them believe that we are heading towards a recession.
Yeah,
that's just the reality. Consumer sentiment report that came out earlier today stated the same exact improvement on inflationary outlook. But we are right now, I believe, in a position where we need more data. First of all, we already know, and it looks like Powell will come back out and they're going to raise the rates by another 75 basis points. I think we will get a dip again once Powell comes back out. When the Fed speaks, the market shakes. Let's leave it at that.
Yeah, it's actually leading up to the speech where we get that week. We normally get a pretty decent sell-off going into the actual speech. So risk off all week until he speaks. And then, like I was telling you before, I called my buddy and I was like, the Powell basically said we could be in a recession and the market's rallying right now. And then the next day we gapped down and everybody sold out. So that was an interesting move. So you have to give investors a day to digest the data. Because it seems like it's definitely delayed, but most of the selling usually comes prior to the actual meeting coming together. It seems like it's what I've noticed that week following up, you get a pretty good dip.
Hey, let me ask you this, and just in your opinion, I'm curious because you worked on the street. Now, for those of you who don't know, I worked in real estate. And I worked for a pretty prominent real estate firm in Manhattan, so it wasn't necessarily on street. I lived on Wall Street. That's as close as I got to the bowl. Um, in terms of YouTubers, investors who are on YouTube, they're looking around. What do you think they're looking for when they're on YouTube in terms of the news and their intake of really economics? Because in my opinion, maybe it's just because I'm a value investor, a dividend investor, and I'm looking at the whole picture.
Mhm.
I don't really see a lot of investors on YouTube really diving into the data.
Yeah.
And
Yeah.
I think it's really important, at least at a macro level. Like, please,
That's,
folks, dive into the data.
that's funny, Ari, because that's kind of what I think. I separate myself a little bit from most other people is I look at basic, basic charts. Are we, did we have a massive technical breakdown from the charts? That's mainly what I look at. But I look at the economic backdrop and what could be what could actually outperform due to the economic backdrop. So we talk about high inflation. We talk about, we talk about medical needed more than ever with what's going on globally right now. Political tension. So what kind of stocks are going to actually outperform during those types of downward movements? Well, we talked about inflation. Some of these REITs might be a good hedge to inflation. Some of these healthcare stocks that actually start selling off that have great fundamentals and great pipelines, that we need these products in the near future, it could be a great hedge too. So I do look at the economic backdrop. So it's funny you bring that up because, I was telling you the biggest problem I have with my channel is like, do I go lighthearted and be entertaining, or do I actually like give good sound advice and be more serious? Because it's like, I'm not good enough to do both. Like, that's a tough thing to do, go back and forth.
Sure.
And I feel like I'm pretty good at digesting economic data and being able to relay it to how it could translate into the stock market. And I think that's probably one of the things I do a little bit different, I would say. So yeah, I wanted to thank you because that actually puts clarity on kind of what I try to do here.
Yeah, no, look, and we spoke about this a little earlier, right? I had the same exact troubles where it's almost this balancing act, right? Because you're on YouTube, and as someone who really wants to be a form of a financial coach, or at least someone you can look to, a beacon of light to say like, hey, this is a value investor. He's playing it safe, and that strategy is working versus the guy who's popping off names of stocks just to
Yeah,
try to get the views on my channel.
right.
And it's silly to me, and I'm not going to drop names here and talk about
Oh,
other
we could
YouTubers.
drop name we could drop names.
I know me and you at one point
we could
both
we
were
could drop
commenting on
names.
channels,
I'm
but
not too worried about that. So but no, man, I agree because it's like I wouldn't say it's, I'm going to be honest. It's a little bit of a jealousy factor because it's like you see some people that are pumping these stocks that they shouldn't even be talking about. First off, that there's no fundamentals backing these companies. And then you go into your channel and you're talking about something that nobody's searching for because nobody thinks it's a 10x stock. And
boring.
it's like, yeah, exactly. And it's so frustrating because you're like, but I'm giving you so much more material here than just being like cheerleading some garbage stock. But it's
Yeah,
what the public likes. It's unfortunate. People are interested. People are more interested in kind of the 10x move instead of a predictable way to kind of create retirement for themselves. It's unfortunate, but
but
hey, Adam, appreciate it.
here's what's interesting. When we first spoke over the phone a couple days ago, right? And I was talking about these people who are trying to get rich quick. I like to say get rich by Tuesday.
Yeah.
And if that's your approach, please, I mean, get another
Hey,
one. But
if it works, man, God bless you.
what I appreciate that you shared on the phone was that a lot of it actually comes down to these newer applications like Robinhood and Webull, where you get a really trigger finger happy
Yeah.
young investor
Yep.
investor,
Yep.
and they're clicking away on what's hot because they
Yep.
just heard, again,
So
not gonna drop
I'm
names,
gonna,
but
I'm gonna,
X,
I'm
Y,
gonna.
and Z drop
No,
us.
dude, I'm so glad you brought this up. So we talked on the phone before we decided to go live today, and I brought up, we have a similar thought process because we're both, we both think that there's some economic turmoil. We kind of read the data and digest it very similarly. We both look at value over kind of the story, and yeah, what's happened is Wall Street has built a casino Wall Street has built a casino of brokerages. And the reason why they've done that is because the money is not in buying and holding for Wall Street. The money is in transactions, right? That's where the money is. Every time you buy and sell, they're getting a piece of that. They're getting a piece of that. They're getting the buy and sell orders at better prices than you know. So they're taking those profits, right? So they need to treat it, they need it to be engaging for you and make you want to trade. And that's why you see the bells ringing. That's why you hear the bells ringing. That's why the lights are flashing, because they want you to get that dopamine to start being emotional about your investments. Because at the end of the day, it's one or two ways they're going to get your money. Either A, they're going to get it because you're doing 15 transactions a day and you're losing. And then B, they're going to get you from assets under management because you're finally going to give up because you're not a good trader, and they're going to take your assets regardless. So it's a win-win for Wall Street to create these platforms for people to feel like they're gambling, and eventually they go broke, and eventually they give up on taking the path that they could have took themselves and have control over their own financial freedom, and they hand it over to that brokerage anyway.
It's a sad story. I'm gonna ask you now, man. Reveal the truth. Do you have Robinhood or Webull?
No. I mean,
Okay.
okay, I've downloaded the app and I've used the news feeds, because I will say this. I will say Robinhood's assets is the fact that the news feeds are pretty friggin' phenomenal in some of those apps. I use TD Ameritrade, man.
Okay. I'm
TD
a fan of
Ameritrade.
that.
Yeah, TD Ameritrade's awesome when it comes to watch lists, and when it comes to, you get alerts when you put certain price targets in. So I got pretty extensive watch lists on TD Ameritrade. It syncs to my phone, so I could be out with my girlfriend, and all of a sudden 3M's hits that
Don't ruin the
115 mark.
date. Don't
Yeah,
ruin the
no, it
date.
ruins the date. Yeah, but hey, it's you get a deal, you get a deal. My girlfriend knows I'm cheap, so it's like, hold on a
Yeah.
second.
You
So
are not cheap. You are frugal. Come on.
frugal. I try to tell her that, man. She doesn't always agree with me, but
Look,
I get mad, Ari. I get mad. I need to own Amazon because I know the guy's name that comes to our door every day for my girlfriend. So it's like, bro, I
yeah.
can't buy Amazon. So
Now you feel you own just a little bit of it, right?
yeah, I'm like, every time he's coming to the door, I'm like, well, at least I'm getting it back some way. It
You
might
put
be
that
very little,
package in the right place.
yeah. But
And
yeah,
drop it gently. No. Look, speaking about Amazon though, talk about Amazon stock right now. What are your thoughts? Because what I'm looking at is an opportunity when it comes to Amazon. Likewise, again, with Microsoft, Apple, Amazon, Google for that matter. I
yeah.
know Tesla's in that mix, and I know your feelings about Tesla. Or
Yeah, I'm not huge. I'm not huge on the car industry right now. When we think about where we're heading in the economy right now, my girlfriend's on. She heard that, so uh, she got the little smiley face
Is this
there.
is this Nicole? Nicole,
Yeah, Nicole, she's listening. So love
I
you.
will
I
share
love
right
you,
now
babe.
that
Love you, babe. I don't mean anything by it.
if Colton pulls his phone out again on a date, I won't do another live stream with him.
She knows. She knows. I love. I love following like the economics of. I'm obsessed with the economics of things and how it translates to opportunities for individual stocks. That's kind of where I'm super passionate about that. But like I was saying before, Ari, I don't think you need to get super cute. If we got newer investors on here, you're talking about companies like we were saying, Amazon and Apple and Facebook being down 40-50%. Just,
Facebook.
yeah, dude, just buy the index that's made up of these companies. Don't try to pick the winners and go overweight, because what's going to happen is, if $5,000 is a lot to you and you buy Facebook, if you bought Facebook at $200 because it was probably, intrinsic value for Facebook's probably right around $200 right now. So if you bought Facebook at $200 and you put $5,000 into it and it dips to like 150, you're sitting there like, that might be a lot and that might be too much for you to handle. Just buy the indexes that are overweight Facebook, Amazon, and Apple right now. You don't have to pick the winners. The market's given you the opportunity, take it while it's there. And then once we get more of a normalized market, try to pick the winners then. But this is not a normal market.
Or that beginner investor who perhaps maybe just joined us, or you've been watching and listening in. When it comes to a play like Facebook, to your point, investing $5,000 in Facebook, $200 per share, and it dips.
Yeah.
That emotional turmoil in your stomach. I mean, I can almost guarantee I would sell as a beginner investor. And I think that's very scary in recognizing that even before I just recently moved outside the United States, but before I moved, I had a really good buddy of mine who was watching Facebook stock plummet, and he goes, "I'm buying Facebook." And
Yeah.
I said, "Well, what's your experience with investing thus far?" And he goes, "I don't even have a brokerage account." So I said,
Mm,
"Look, let's do this. Let's just set you up, right, with a Vanguard account and dabble maybe a little bit here and there with a Facebook or,
yep.
another hot stock, but build a foundation
Yep.
at least for yourself with
Yep.
an index fund or an
Yep.
ETF." And I really like to run with Bogle's advice when it comes to index investing, which is
Yep.
find yourself a broad market index fund that covers the entire market.
Yep.
And that's going to give you, opportunity to be invested in growth stocks, value stocks, small, mid, and large cap opportunities that if you just throw all your eggs into Facebook and that stock dips,
Yeah.
you tell me how your stomach is
Yeah, I
feeling.
mean, and
I'm already feeling it.
you never know what can happen, man. You just never know what can happen. Like, I mean, Zuckerberg could go on left field and start going nuts, and the company goes under. You don't know what can happen from day to day. So, and you're kind of hitting on a point that I touch on is like right now is a great time to buy indexes because the markets are just down. They're giving you free money right now. Like
Yeah.
the market's giving you free money because most of these indexes are paying more than you're going to get in a 1 year yield anyway. So lock up your money for 12 months in one of these indexes, get a 2-3% dividend, and own a basket of good quality companies and start from there. And then start like diving into those individual companies that are in the index. Like go through the quarterly reports, listen to the quarterly reports, go through the financial statements. And once you start educating yourself on that, maybe start dabbling 5-10% into individual stocks that you feel like you've done your due diligence on, but I think we get so excited to it's unfortunate, but YouTube, the community, it's not even just YouTube, it's just the get rich quick
Yep.
mantra is just, it's everywhere. TikTok, YouTube, everywhere. And so everybody wants to put all their money in one company and think it's going to 10x, and it's just unfortunately you're talking about very few companies that do this. Like
Yep.
when you really break it down statistically, more than not these companies are going to fail, and you're putting all your money in that one company, you know.
I've said it before. I'm going to say it again. It pays to be patient. And when it comes to index investing, that's actually how I started off. And I built myself a foundation. I like to call it a foundation. $10,000. I just kept throwing money into an index fund, and from there, as I built more confidence in myself as an investor, and also realized and studied strategies, which one
Yep,
is going to be best for me,
that's a good
because that's
point.
important as well
Hmm.
to really understand the strategies and then to
Yep.
implement the one that feels best for you as an investor. Then I started buying individual stocks, and now the way my portfolio is looking, I mean, I think it's beautifully built. I
Hmm.
probably have a biased opinion, but to each their own, and
No,
I
I
think
think, just from
index
our
funds are.
conversation, I think you're well diversified. Like you buy good quality companies on the dips, and you have criteria that they have to meet. And you made a good point. You know, pick a process that works for you, because at the end of the day, and I've said this a million times, I can make fun of these other YouTubers, right? I can make fun of these other YouTubers, but if they make 200 or 300%, the scoreboard is your brokerage account, right? So they won. Like the scoreboard says you won because you've got X returns. Now, is that sustainable over a long period of time? Probably not. So the scoreboard's forever going here, but the scoreboard says you're winning right now. But if you have a process that's calculated and you can understand and it works for you, regardless if you're a growth investor, dividend investor, because I hear people talk bad about dividends sometimes because it's not the most tax efficient way,
You
and
get a lot of heat.
yeah, you get a lot of heat for that, right? But what I would say to that is if their process works, who cares? Like if their gains are pacing the market or even outpacing the market, then in the end, it's like that process is working for that individual, right? So I don't judge anybody's process. If somebody's day trading and they're making 40% a year, the scoreboard says you're winning, man. Like, so God bless you, like keep
Look,
at it.
and to that end, I was just on a different live stream, and I had shared similar right insights of mine here on dividend investing, and I threw out the word, or the stock Johnson and Johnson, just to talk about it. And the amount of heat that I got for talking about Johnson and Johnson on a channel that I don't want to say predominantly is growth investing, but there's crypto in there, there's growth, and there's some value there too. The commentary that I was seeing, I was just blown away. And someone sharing, why in the world would I get invested into a Johnson and Johnson when I can just throw my money into a Tesla? And for me, it's like, well, you don't know what, I mean, nobody really knows the future, right? But you don't
Right.
know what Tesla's going to look like in 1 or 2 years. I can make a case that Johnson and Johnson will execute pretty beautifully. I mean, 130 plus years worth of rich history,
Yeah.
growing
They got
dividends.
a heck of a track record, you know?
They cut me a break, and I'm
Yeah.
like,
You're essentially betting, if you're not investing in them, you're essentially betting that they're gonna fail with that track record, and you're probably gonna lose that bet, you know?
and
So,
I'm a Musk. I do have Tesla stock, right?
yeah.
Like that is one
Well,
of
I
my
won't make
growth
fun of you
stocks.
too bad. No, I'm just joking. No, I'm just
Now I'm
joking.
being judged. Yeah, I'm gonna keep quiet.
So I would agree with you on that, like that, having that approach and having a process for that individual. Everybody's different. Everybody's going to want to do different things. And it's funny. Like a lot of times I hear people say, "Well, if you're younger, you should be taking on more risk." And I don't necessarily agree with that. I think if you're younger, now's your time to build a heck of a base because it's predictable now. Like if you can calculate, 7 to 10% returns and you get a decent sum of money in there by your 25, 26 years old, and you got a nice lump sum in there. Now I think you can take some risk because the future, your future self is already paid, so now take on a little bit more risk, learn the process of, evaluating stocks. And so that's my opinion. It's like while you have time, don't play with that. I mean, I'm saying you can buy individual stocks that you believe in. I'm saying take on a little risk, but it's like when you have time on your side, I wish I can go back, right? I wish I can go back and just buy the indexes, maybe Walmart, maybe, so a couple companies that were blue chip companies that I just never looked twice at. But now I'm looking back. Oh man, I got a story for you. If Tom's in here, he knows this story. Um, I bought Microsoft at $33 and sold to put a down payment on a house. And I look back now and I'm like,
Nicole,
man,
are you still in here with us?
yeah, like if I still own Microsoft, dude, like wow. And but I mean, it was dude, when I bought it, it was a boring company. It was, paid a dividend. It was just nothing sexy about it. And then it just blew up. It blew up out of
There's
nowhere.
nothing sexy about Bill Gates. You don't think
Yeah, it was, you kind of,
not?
well, at the time you thought they hit the wall, like a Johnson and Johnson. You thought they hit
Yeah.
that wall and they're probably not going to go much, but then they just started acquiring companies. They started building out, obviously they got LinkedIn. They started getting more innovative.
Look, they
Uh,
have the capital. They have the capital to do it. And
Cash
again,
flow,
it's
man.
those boring companies. Those really boring companies. You don't need the sexiest product of the year every single year. Think about Apple. I mean, how many of you are out there right now with an Apple device that you're either watching this live stream on or you're picking up here and there to check your messages? There you are.
Yeah.
I don't know about you guys, but I'm buying the next iPhone just because I'm sold on Apple already.
Yeah.
And if you're Microsoft, you're Microsoft. But either which way, I mean, these are established companies. You're going to stick to what you know and what you love.
Yeah. Yeah. And Susan is making a great point about, immediate gratification. That's exactly the society we live in right now because you have TikTok stars making millions of dollars overnight. You have day traders, doing
Yeah, I'm
crazy
jealous.
things. Yeah. I mean, it looks great until they blow up their account, right? I mean,
Yeah.
it's nuts. Um,
Look,
yeah.
I think if go ahead.
Adam's got a good point here. Adam's got a good point here. He's like, getting rich isn't sexy, being rich is. And it's true, man. Like, you could be a garbage man, a plumber if you invest right and you have a successful business. It wasn't pretty how you got there, but it's nice when you get there, right? So,
Absolutely.
and
Look,
I think
that's the difference between wealth, right, and being rich. I
yeah,
mean, and also to that point, there are two great books, The Millionaire Next Door and Everyday Millionaire. And when I read through those two books and understood that there's actually a great amount of millionaires in the United States that are teachers, garbage men,
yeah,
and despite, popular belief, it's
yeah,
not always your Wall Street execs. It's or the Wall Street guys. It's not always
So I'm gonna
business
I'm
owners.
I'm gonna piggyback on you. Being in the financial services, you come across an array of different people. You come across teachers, you come across business owners. So I met a couple. A couple made a $500,000 between the two of them a year and had $30,000 in debt and 5 grand in their savings account.
That's where we're at.
And I'm like, and most of the debt was like very, very high interest debt. So I was like, you have to pay off the debt. They tried to flip a house and it was just like an onion that they peeled back. They bought like a $700,000 house and they were going to flip it. And it was just a disaster after disaster after disaster. And I'm just like, wow, like you guys could have just put a $500,000 in an index fund and you guys would be sitting pretty after 10 years,
And
like,
just relax, right?
yeah,
Like,
it's like you don't have to think about it. You have to stress. But yeah, it's just that's the kind of thing you run into. So I want to talk really quick about kind of like the impacts of inflation and what you see happening going forward with inflation here.
yeah. So I look, moving forward, I think we really need to be patient. You know, Fed Chair Jerome Powell has said time and time again that is his primary focus. They're going to work to bring inflation down to 2%. And, for the foreseeable future, I think, we'll begin to see inflation come down as long as those interest rates rise. I think it will, of course, move the market, but hold tight. As a long-term value investor, I'm not concerned about near-term volatility, but inflation will eventually come down, continuing upon those interest rates rising. And so
Yeah.
just keep that in mind that will take time. We cannot move too quickly either. If Powell raises rates too quickly, people also have to understand that in and of itself will spook the market.
Yeah.
And that's what we want to avoid. So I think what we're going to see another 75 basis point rate hike. And then from there, it's going to proceed with 50 basis point rate hikes. Slowly but surely, that inflationary rate will come down. And the stocks that I'm looking at right now, I'm going to throw them out. I'm going to make a video this upcoming week about 5 stocks that I really have in focus. One of which we already talked about, Apple. I was looking at Procter and Gamble when it was sitting at 100 in the 130s. It's now jumped to 144. I think it will come back down. Medtronic is in focus for me. That's a healthcare play for you.
Hmm.
Visa was another one I was looking at, and of course T. Rowe Price. And what was interesting is I put together in tip ranks 2 portfolios. One was actually just with an index fund, VTI, Vanguard's Total Stock Market Index Fund, and the other I made a small portfolio of just those 5 stocks. And thus far, I've been watching the performance of both, and I'm actually happy to report back that just given everything that happened this week, that Power 5 portfolio that I made of the 5 companies is actually outbeating that index, the Vanguard's Total Stock Market Index.
That's awesome.
What does that tell me about these stocks moving into the future? And these being my stocks in focus, is that they're beaten down right now, contingent upon inflation, Powell's remarks, interest rates. When we like what we hear from Powell, those stocks will rise. Again,
Yeah.
the index will rise as well. I didn't beat it, substantially, only about $100, $150. But that's what I'm looking at. So what about you? What do you think?
So, I think, and just to kind of take a step back, I think you don't have to rush to anything because like we were saying before,
Sure.
I really truly believe that we have another leg down in this downturn. Maybe we don't, but I truly believe we do. This is the first time in history that we're going to have an unwinding of this magnitude. Along with that, we're possibly on a cusp of recession, which they're tightening into a possible recession, which we've never really had. There's a lot of data points that I'm looking at. It's actually new homes built is one of the most accurate things that I've come across. This is really weird statistic, but it's one of my videos that like nobody watched, but it's a really weird statistic, man.
Warren.
Yeah, I'm just giving you guys, trying to give you guys some nuggets here, but it's a really weird statistic. New homes built versus new homes being bought. When it stays on the market for 9.5 months, it has cleared recession. So 100% accuracy. We are at 9 months right now. So I saw that statistic and I was like, this is very interesting that newer homes are staying on the market now longer. And if it pushes that 9 to 10 month period, and we already had negative GDP. A big part of our GDP is, obviously consuming goods and services. Homes would be a big part of that. So I find that very interesting as kind of like overlaying that with where we are. But to get to the broader point, I don't think you need to rush to anything because the feds are not coming in to bail us out. They think they really understand that they have to unwind this balance sheet. I think they understand that, this is getting pretty, people are getting hurt now. And unfortunately, I think this is going to be a long, drawn out, just inflation's going to beat you up. Even when inflation's at 5 or 6%, we're talking about almost 9% inflation. And like, hopefully it's flattening out. Like, what the heck are we talking about here? 5% inflation is high, So once we get to 5 and 6% inflation, it's still going to beat up the consumer. And I don't think people are really thinking about that. I think they're just so focused on it flattening out. I'm still thinking if we don't get to 3 and 4% inflation quick, the consumer is going to absolutely collapse at some point. And so that's why I think you don't need to rush to anything, because I think the consumer is unfortunately going to get so worn out that there's still going to be tremendous amounts of opportunity 8 to 10 months from now. And it's going to be more of a U-shaped type recovery, not a V-shape. But that's just my opinion.
Look, I completely agree. And, when you're talking about inflation, yeah, it does need to come down, but that needs to happen slow. Nothing great happens quick. That's what kind of how I like to look at it. And moving too quickly, I'd love to get to 4% inflation. I'd love to meet Jerome Powell at 2% inflation.
Yeah.
But that's going to take time.
Yep.
And it actually wraps me up into this point, in that while we're waiting, okay, we're in bear market territory right now. We're down 23, 25% or so.
Yep.
And the recessionary downfall would be, correct me if I'm wrong, maybe like 35% of a dip.
Yeah,
So
roughly.
We're talking about some time right now where I think investors, and this is what I love, investors have an opportunity. I mean, let's be opportunistic here. We have an opportunity of a lifetime to get our hands on not the Palantirs, okay?
Yeah.
The Apples and the Microsofts that are rarely discounted.
Yeah.
Apple's about 24% down off its high this year.
Yeah.
That is a rare opportunity. Microsoft, very similar levels. Google, I mean, they're all at these levels in which if we buy in right now, play it safe, be patient, that return will come. And you may be one of those live stream followers prepared to thank Colton and I in the future. And that's just my opinion.
Seriously. and you're actually bringing up a good point in the fact that what you do get with these larger companies that you're getting that might not have the 10x, but it's going to be consistent, steady growth in a downward market here, is the fact that there's going to be a lot of M&A that's going to take place here soon, right? We're talking about some of these valuations on these companies where their assets are making set. I look, and I'm just using SoFi as an example. Now, I don't know if anybody's going to acquire SoFi, but I can see them acquiring SoFi, especially like a Citigroup who kind of needs to catch up with the times here, right? I could totally see Citigroup with SoFi's market cap sitting right around $5 or $6 billion. A company like Citigroup picking up some of those assets that SoFi has and just building out more of a fintech type of relationship, but still keeping their brick and mortar. So I can see some M&As taking place now with banks. It's a little bit more red tape, but I'm just using that as kind of just a hypothetical. But I can see a lot of these M&As taking place with a lot of these stocks, that have fallen. Is Robinhood now, like if you're like a JP Morgan, is Robinhood's platform worth what their market cap is worth right now? Like, I don't know. Like, is Jamie Dimon sitting there saying, geez, this online platform that they have might be worth X amount of dollars, and there might be some sort of M&A that comes. So, you don't know what people are thinking, but I'm seeing a lot of these valuations come down to more reasonable levels. And some of these companies are probably going to end up going bankrupt. So it's sad, but
it's not where the market is right now. It's where the market's going.
Yeah.
And, to that end, taking a look at younger generations right now, I think that's, what we should be looking at is a Robinhood going to be around for the next decade? Is it?
I know JP Morgan is
around. I don't know.
Yeah. Morgan Stanley, JP Morgan, they're going to be here. So Susan has a good question, and I don't know if she's still here, but Susan has a good question. What would get you interested in a few growth stocks? Like, what would have to happen for you to even?
It's a great. I mean, I'm a huge dividend investor, value investor, and look, my closest growth stock here is an Apple, right?
Yeah.
And I consider that just another one of my dividend stocks. Now I have Tesla in my portfolio. Here's a really interesting play. It's a very small position within my portfolio, but it is actually just a growth stock, and that is Lemonade.
Yeah.
Um,
For
now,
insurance, right?
yep, yep. Now
So pretty
I'm going to throw this out there and be really transparent with everybody. I bought Lemonade around, I think, 64 or so, $65 a
yeah.
share, and it's tanked. I mean,
Yeah.
we could pull it up right now to take a look at where it's trading. But the reason I bring that up is because my initial take on Lemonade was they're a brand new insurance company on the block. They're running on AI, and that's not to say like a company like a Geico can't, with enough firepower of capital behind them, start running on AI as well, and get to Lemonade's level. But I saw Lemonade as a company that was up and coming, that the younger generation is interested in. Even more interesting was, like when I lived in Manhattan, I was managing two high-rise towers off of Wall Street. One building had 650 units and the other had 720 units. And when I was sitting and signing off on these leases, I saw predominantly Lemonade Insurance,
Hmm.
and that made me look into Lemonade. And then I started fielding, questions and answers with my friends who had Lemonade, and they
Interesting.
loved it.
Yeah.
And then I actually started to use Lemonade, and I loved it. That's why I jumped in. But what I would really need to see, I think, is just a company that blows me away. Um, Bill Ackman, I think, says it best when he shares that at any given point in time, there are really only 2 to 5 exceptional companies out there.
Yeah.
And so why jump into, 10 or 20 or 30 when
Yeah.
you can really focus on 2 to 3? And I would just really need to see a company that blows me away.
So I'll tell you, a company caught me off guard, a growth company, to kind of get to Susan's question. And PJ just subscribed to your channel. PJ's a good guy. So
Jay, thank
yeah,
you.
he's a good dude. He's always active and positive, which I really appreciate. And then Adam kind of backed you up on Lemonade and nibbled on Lemonade, and also Datadog. So Airbnb to me is an interesting one.
Hmm.
Okay. Have you had a chance to look at their finances?
I haven't.
Okay, so their finances are their business model is blowing me away. The one concern I have is how how competitive can they stay? Their valuation's a little expensive, but I think they're. I want to just double check, guys. Give me 1 second here. I want to check
PE
their.
or ED.
Um, so, I look at them as a big disruptor to the hotel play, right? And I think about where we're going and how rents are getting out of control and most people are working remote. I see a huge market for this company, right? So they did their trailing 12 month, they're doing 6 billion in revenue, and almost 50% is coming down to free cash flow. So 2.7 billion is coming down to free cash flow on Airbnb. So they're doing a little over 6 billion in revenue. 2.7 billion is coming down to free cash flow, so they're free cash flowing. The problem I have is they're trading at a price to free cash flow of like 25 or something like that, which is fairly rich. Now, if we get a huge pullback, I think if you can get it in that 15 to 20 range with the projected growth rate, I think it's a very interesting company because this is going to be a cash flowing machine, a lot less liability, in my opinion, than Uber. So I think of Uber as you got the unfortunately with gas prices, uncontrollable gas prices, their margins are getting squeezed. You have liability with the fact that people are driving these vehicles and they're in danger every day that they're on the road. So Uber, I used to like Uber as far as that goes, but then I took a step back and said, I really don't like that. Now I look at Airbnb and say, this is like Uber, a lot less liability. And guess what? They're free cash flowing. Almost 50% of their top line revenue is coming down to the bottom. So I look at this company and I'm like, if we get a huge pullback in the market, is Airbnb going to go anywhere? I don't know. Like it's a risk, but I don't think anybody's going to copy them. I think they're becoming the
Well, look,
Coca
they were the first. They're the
for the
first.
market. Yeah.
They're the leader. But to this point, I also want to share that we're looking at, and everything you just shared is great, but you didn't mention that over the last few years, people really haven't been traveling. So is this an accurate reflection of the
Of
power
what
of
it,
to hold in the
that
future.
it could be, yeah, and that's where I get even more excited because I'm like, just like you said, I'm thinking like, okay, people are not traveling, not as much as they would want. We're going into a recession. This stock is going to get hammered, right? But financially, if they come out of this, makes it a buy for me, because if I get them cheap enough and they were able to get through a recession and they kept their books clean, they didn't dilute, now I'm going to buy. So it's like that game of patience we talked about earlier, right? This is a great company to put on a watch list and be patient. And if the valuation gets right and they get through a recession and we get back to more of a normal life and we're kind of traveling once again, I think this company has something special, that their business model is just so powerful. Because I'll tell you why, Ari. People are building businesses around their model. People are buying homes and fixing them up just for Airbnb.
Hilton's doing it,
Yeah.
right?
So
They're no
how
longer just
powerful?
building towers, right? Like Hilton
Yeah.
hotel towers. They're actually
Yeah.
building very small complexes,
So
and I think
people
Bill
are
Ackman
building to
wrote
build to build a business around their platform. To me, is like that goes to show how sticky they can be.
yeah.
And a lot of their top line goes down to bottom line, which is you don't find that. So very interesting play, I think long term. But I think you have the great thing about it is like you're sitting here and you're saying, okay, the valuation's stretched. Don't buy it. If it gets through the recession, if we go through a deep recession, it gets through, they can still maintain some sort of occupancy. There's still free cash flow. I mean, what prevents you from now? We go into a reopening, buying it
Also think
cheap.
about this though. We come out right of finally. I can't even say we're fully. I hate to break it to all of you, but we're not fully done with COVID. I know if you're thinking we are. I came internationally here and people had COVID. I was put into a quarantine, and I share that because we're not fully out here of this COVID past, and the world in some places is still locked. I think is China still in lockdown? I
They're
think
coming
some,
out. They're coming out of lockdown, and
okay.
they're talking about quantitative easing, and that's why we're seeing these Chinese stocks absolutely skyrocket now. And
So
yeah,
there you go. We still have China, right? Lockdown in other countries as well. But the point that I'm getting at here is when the world really opens up and we put ourselves, back to 2%, right, inflation as opposed to 8.6, what are people going to be doing? People want to travel. People want to spend,
yeah,
and that's what I think Airbnb. Even so, when you go now, I don't know, who's watching right now, the age range here and the demographics, but I would safely assume if my father first thinks about looking into Airbnb before he thinks about checking into a hotel and he's in his late 60s,
hmm.
that's where the future's heading. And so
Well,
I want to meet the future at where it's heading.
so and you make a good point. And what's the thing you like? You've used Airbnb? I'm sure, right?
Of course, yeah.
Yeah. And the thing you like about it is like you can customize what you want. I want off-street parking. I want to have a stove. I want to have this. I want to have that. And guess what do you know what makes Airbnb so powerful? Is that person dictates what the market is. So they can now compete with hotels. They don't have the overhead hotels have. So if a
Yeah.
hotel room is charging 110, I can charge 95, have off-street parking, a full kitchen, privacy, and now I'm setting the market. So it's undercutting hotels. So I just see this as like, I don't want to get too emotional, but I can see the big picture of where this goes. And especially when we talk about global and things getting back to normal, Russia, Ukraine maybe comes to an end. We talk about travel restrictions off. We talk about, just inflation getting under control. I mean, the amount of opportunity for this company and the fact that a lot of their money goes to the bottom line. I don't know, man. It's a
But
good
it's
deal.
opportunity. Again,
Yeah.
it goes right back to being patient. And
Yeah.
I think that is just something we've harped on this entire live stream is patience and value investment, right? It's like do not go for the gamble, especially right now in these market conditions. Be patient, be prudent, understand what you're investing in. And I also want to say that you should try investing in the companies that you actually utilize, right? So I do utilize Airbnb. I'm a believer in their business model, and I think it's where the direction, the future's heading. So would I have interest of investing in Airbnb? Absolutely.
Yeah.
Absolutely.
Yeah, I think you can see the need for it too, right? The customization that you have, the availability that you have, the privacy. They're just, all the way down to you only got 25 bucks and you want to rent a room. Like it's pretty it's an interesting business model for sure, and it's just like it's going to get tested, and that's the great thing. We're going to be able to sit back, be patient, see how their business model gets tested here, and maybe buy it extremely cheap, and coming out of this could come out very strong. But I know you probably want to go here soon, but I guess then the next question we can finish up with is kind of what your expectations are for the market going forward, and kind of what you're trying to accomplish as an
Right.
investment standpoint and with your channel.
Yep. Yep. So in terms of, the Blue Line Finance channel, I have some things in the works right now. There will be some changes made on the Blue Line Finance channel. And, that's channel, but the channel aside, I want to share that where I think the market is heading, and I'm going to be, I'll be optimistic here when I share this, and that I think we're heading in a great direction. I think interest rates are going to rise slowly but surely. Inflation will slowly but surely come down. And right now is an opportunity of a lifetime, really, for a younger generation to take advantage of high valued stocks.
Yeah.
That's what I'm going to continue to double down on myself. I see the market in maybe the next 10 months, maybe a little longer, coming back up on an upswing.
Yeah.
And I'm not talking about a mini, bear market rally. I'm talking about inflation really starting to come down. The proof being in the pudding itself,
Yeah.
because I can't have one, inflationary report come in and it's maybe 8.48%, and then the next one's back at 8.5.
Yeah.
So I need to see consecutive.
Consecutive CPI readings coming
Yeah,
down, or
yeah,
heading in the right direction. You can't just go off of one or two, because we're still waiting for the impacts of what's really going to happen with Russia, Ukraine. Like, we don't really truly know the impacts, and only time really knows the impacts of all that. So that's going to be the interesting one too, is if we do get a mild reading on CPI, and the next reading jumps up, like how is the market going to digest that one?
Look, I got to throw this one out there. More needs to be done in terms of what's happening in Russia and Ukraine. Putin's a wild man. I do not think that our current president, is handling the situation as he should be, and I think he needs to be more boisterous. And I just think Russia and Ukraine have impacted the market so much more than people think.
Yeah.
I don't see a lot of YouTubers really talking about it. I don't know if it's because of politics, but
I think you're
politics
giving
impacts the market.
I think you're giving them too much credit to even factor that into their thought process. Like, I'm not trying to be a jerk here, but yeah, financial education, Jeremy, we're going to throw him out there. He's
The
he is
gauntlet, the
investing.
gauntlet.
No, man, I'm not, and like I
Sorry.
get away from all this because like I was making, I was telling you before, I made videos about YouTubers, and making fun of them and being kind of harsh and funny. And then I was like, that's just not where I want my brain to go. What I want to be is a reliable source and just an upfront, honest, not always going to be right, but I'm going to give you my best opinion, and I'm going to put my money where my mouth is. And that's all, and that's what I want to accomplish, and mainly motivate people to make rational decisions instead of emotional decisions, because with him, very emotional thought processes. So when Jeremy picks a stock, it's very emotional stuff he's thinking about, what the product looks like, what this does, what that does, but it's no fundamentals are backing up the emotional thought process. You can have an emotional feeling. I'm emotional about Airbnb, but the fundamentals are also very strong that are developing in that company. So, that has to go hand in hand. But to get to your point, it was picking stocks, right? We're talking about picking stocks that need capital. Okay. Talk about a recipe for disaster. Picking stocks that are running out of capital because their burn rate is so high into a tightening economy makes absolutely no sense. If a company is not free cash flowing, and interest rates are rising, and inflation is rising, and cost of goods being sold is rising, you don't buy companies that can't free cash flow and that don't have a competitive advantage. You just don't do it. That's my
Would you?
that's my rant.
Should we change? Should he change his name? Financial education. To
Yeah, oh,
something else?
jeez, man, financial education, man. Every time I watch him, I feel like I mean, like, here's the thing, like,
Remedial financial education. I don't
he's
know.
got a ton of subscribers. He's charismatic. You know, I I can't say I don't know as far as knows what he's talking about. I never really see him break down fundamentals, and that's always been a kind of a question mark that I've had is like, you know, when you look at a company, I open up the quarterly reports and listen to the quarterly report, you know, and I know he listens to the quarterly report, but the problem with listening to a quarterly report and not reviewing the numbers is that the quarterly report, they want you to be emotional, they want you to be excited about their company, they want you to buy into their brand. So there's a lot of
Of course.
cheerleading that goes on, you know, but when you're reading just the numbers, that's just black and white, man. That's your bottom line. That's what you made. That's what you put on the market for share dilution. That's what your top line growth was. There's no hiding that, you know? So that's why I think you have to read quarterly reports before you start listening to these phone calls, man. And he
Look, on the
doesn't do
flip
that.
side, on the flip side of this coin, I do want to mention a great channel that I stumbled across not too long ago. It was Everything Money.
Yeah.
It's a team of three guys, and they do a phenomenal
They got
job.
such a professional setup, dude. I'm like
Yeah, I wish I had
so
it.
jealous.
You know, I open and transparent with everybody here, right? I was in New York in Manhattan, and you know, I just moved into an apartment with, you know, at the time my girlfriend, and I was thinking about creating this YouTube studio and a TV and, like, you know, get the whole thing going. And I said, you know, I'll wait. And I had moved back from international, you know, being international to back to the States. We broke up in like 3 months, 4 months later from that. And I
It
said, you know
happens,
what, I'm
man.
going
It
to do it,
happens.
back out and head out of the United States. So I never built the studio, but that is the one thing I think that's coming down the pipe. And, you know, we'll see a professional studio, a nice TV in the back. I did just start a job at Tip Ranks, and I'm
Yeah,
actually
congratulations,
running.
man. That's awesome.
Yeah,
You're gonna have to pass
I
down any
am the
nuggets.
news now for Tip Ranks,
Yeah.
so
You're
you'll
gonna have to
see me
pass
in the
down
Tip
any
Ranks
nuggets,
studio.
bro. Anytime you hear something, just pass it
Yeah,
along, you know?
which is good. So, you know, we'll see what happens with the studio setup. But they have a phenomenal setup. They have a phenomenal routine, great information, and I want to highlight them. You know, because if there needs to be more YouTubers out there, Everything Money, Financially Fit. You know, if you find, you know, my channel to be informative, then my channel. But just be cautious. I mean, I guess that's what I'll conclude with here is just be cautious out there on YouTube. Understand what you're getting invested in. Be patient, and look. Best of luck to everybody out there. I think
Yeah.
we're heading into an interesting week to come. More inflationary data is going to
Yep.
be coming out, and we should see everybody again on July 13th, the CPI report.
Yeah, we could do that live, man. We could do that live maybe. We'll do the
Oh
CPI
man,
report live.
wedding.
Susan's asking maybe once a month for us to get on here as she's really enjoying the advice. So maybe we can set something up here if we get a good enough you know, response. You know, if anybody's in here and hasn't smashed a thumbs up, go ahead and do so. And also check out the description down below. I got Blue Lion Finance in the description, so feel free to click on his page, check it out.
Like a gentleman.
That's it, man. You know, trying to set you up over here. But no, man, I
Nicole, you got
appreciate.
a good one if you're still on here.
Yeah, no, I appreciate your time, and I think, you know, we definitely have some similar thought processes here. Definitely when it comes with the economic backdrop and the opportunities that are presenting themselves, and it's always good to have somebody to bounce ideas off of. You don't have to necessarily agree with somebody, but just have an open mind and hear another side of things, because sometimes we get so biased with our opinions that we overlook some of the obvious, and it's always refreshing to hear somebody else's opinion on things. So no, I mean, I'm glad we were able to do this, and we'll have to come on and do it again. And guys, consider subscribing to my channel, consider subscribing to Blue Lion Finance, and we'll definitely try to get this done again. As always, guys, appreciate your time, and we will see you next time, investors. Peace.